My guest today is Sean Judge, General Partner at Castle Island Ventures. Sean has been investing since he started working in 2011. He was fortunate to take a wide lens approach early on in his career and narrowed it over time until he ultimately landed in Web3 early stage venture. He is partnered with some amazing minds at Castle Island and aspires to build a generational VC firm. He takes us through the megatrends they invest in and why the future for this space is so bright. LFG, baby. Let's start vibing.
Zach French is a bar-certified attorney, and nothing expressed by Zach during Web3 with me shall be considered legal advice. All the opinions expressed by Zach and his guests are solely their own opinions. All content in Web3 with me is for informational purposes only. Zach and his podcast guests may maintain positions in the securities discussed during Web3 with me.
Welcome to the show, Sean.
Thanks for having me, Zach.
Yeah, I appreciate it. This has been a long time coming. One of my only repeat guest, Giuseppe, introduced me to you and Ash as his kind of North Stars when it comes to crypto native investing. So I'm excited to get into it with you.
Yeah, happy to be here. Giuseppe's a great guy. He and Julian are building something pretty special over there at 186.
It seems like they just keep a very practical mindset, and they're also keeping a nice balance of Web3, non-Web3, like literally 50-50 in terms of time spent in his portfolio. So I'll be excited to see where that goes.
Yeah, likewise.
Well, I usually start these shows with your founding story. I want to get the audience to get to know who Sean is. So just start wherever you'd like.
Sure. So I grew up in the Boston area. My whole family is kind of within 50 miles of where I'm sitting right now. That's in the US, but made my way down to Vanderbilt for college and then started my career in New York at Bank of America, Merrill Lynch in the financial institutions group doing investment banking. So it's mostly covering banks, fintech companies, specialty finance companies, asset managers. This was like 2011 to 2014. And from there, I joined a firm called Pomona Capital, which is a multi-billion-dollar secondary private equity firm, and which was a super interesting job in that, I was learning about different businesses every day. And the other interesting part was learning about different parts of the private equity asset class. So one day looking at a lower middle market buyout company, the next a mega cap, the next day looking at a venture portfolio, growth equity, et cetera. Really kind of fell in love with the venture and growth asset class, as well as the businesses I was looking at in that space, and ended up, after a couple of years at Pomona, joining a firm called Highland Capital Partners back here in Boston. They, at the time, were looking for someone with some fintech experience. And so I ended up kind of leading fintech investing for Highland for about 5 years. And our strategy there was really what we were calling early growth. So it was businesses with a few $1 million in revenue, 40% plus gross margins, growing well, not a lot of capital into the business. So call it Series A through C, $10 to $40 million investments. Back in 2017, we started getting all of these pitches for these initial coin offerings, none of which met our investment mandate, and many of which were pretty head scratching. But the interesting thing that caught my eye was that for every, 3 or 4 or 5 that seemed like, man, I just don't get this. They're raising $80 million. It's 3 people. There's going to be these tokens. I have no idea why any of these are going to accrue value. I don't know what the governance we'd have as investors. It didn't meet what we were looking for. But for every handful of them, there would be like just jaw-dropping talent that would come in front of you. So it might be 5 kids dropping out of MIT. It might be 3 people leaving Google as engineers that are starting this thing. And it was enough to say, hey, there might be something happening here outside of what we were reading in the media and what we were following just as like purely speculative investors out of the PA buying Bitcoin or Ethereum. And so I did a deep dive in the space over 6 months to say, like, is there something here in this ecosystem that we could invest in? And so I went to every meetup I could find in Boston, New York, San Francisco. I went to every conference I could get to, and was just trying to absorb as much as I could in the space. And towards the end of 2017, I saw this guy, Matt Walsh, who was at Fidelity, speak on a panel. And he just kind of jumped out as maybe the most sober-minded individual that I'd met in the space. He was saying things that others weren't. and had kind of a very differentiated and I'd say contrarian opinion on what was investable at the time. And so ended up grabbing him after his panel and said, let's get lunch, and connected further. And Matt's backstory was, he had joined Fidelity in 2014. He had been kind of instrumental in what is now Fidelity Digital Asset Services. He had moved over to the investing side of the house and was thinking about spinning out to start this thing called Castle Island Ventures. And so I said, I've arrived at my conclusion after my deep dive. This guy is the smartest person I've met in the space. He and his partner, Nick, are going to leave. They think there's an opportunity at the pre-seed and seed stage. I don't invest there. I invest at the Series A, B, and C. But the types of things that they were talking about investing were things that I could envision if they should work, we could invest in at Highland. And so I wrote a personal check into Fund One. And Matt and Nick moved into my office, and I moved next door. And that was the start of Castle Island Ventures. And so fast forward a couple of years from there, and I had led the Series A into Coinmetrics, which they had incubated, which is a crypto asset data company selling into some of the largest financial institutions in the world today. We had done Bitwise together as firms. They had done Casa, I did On-Chain Capital, and so it was one of these things where I woke up a few years later and having spent 10, 15, 20% of my time in the space at the time, it was now all of a sudden 95, 100% of my time. And it was nights and weekends, and it was one of these things that was far more obvious, I think, to those in my life that how are you not in this kind of with both feet? And so I ended up joining Matt, Nick, and our other partner Ria Vittoria back in about a year and a half ago, as thinking about expanding Castle Island strategy beyond just pre-seed and seed stage investing into Series A investing. So we closed our third fund about a year ago, started investing out of that in Q2 of 2022. And here we are.
Yeah, now we're here. It's interesting. Is it an interesting path that you took, because you got the exposure to just TradFi at the beginning, and then you got to see what the investment market looked like across all these different sized businesses at different stages in their life cycle. And it's almost like you could hone in on the one that you felt like you could add the most value to. Spent some time in there, started in fintech, which is a common starting point, I think, for a lot of people that eventually get into crypto, right? Just because of that scratch in 2017, 2018 with all these big companies. When you started to see the talent in those areas, what was keeping those ICOs from being investable? Was it a lack of experience, or like why were they choosing that path to begin with? And then what was keeping it from being investable at that point in time, or most of it from being investable?
Well, look, there were plenty of people that invested during that time into some of these projects and did really well. And there's a bunch of those projects that are still around today and have vibrant ecosystems. It was really more from our investment mandate at the firm that I was at, which was we were trying to stay really focused and say, we're only going to look at businesses that have kind of meet this criteria, that have a few $1 million in revenue, that have a certain gross margin profile. And you'd have 5 people walk in and say, here's our white paper, we're raising $80 million and it's going to close next week. And so that just didn't really meet what we told our investors we'd do and what we enjoyed doing. And so look, but again, look, there were plenty of things during that time period that made investors a lot of money that again are still around today. It just at the time wasn't the type of thing that we wanted to invest in there. And what had attracted me to what Matt and Nick were thinking about was they were looking at a lot of the infrastructure and saying what fundamentally has to exist if any of these things end up working. And so you're going to need to have data companies, there will be custodians, there's going to be exchanges where people can exchange these things. So it was more of just some of the kind of picks and shovels plays where I looked at and said, hey, these look like businesses that will have a few $1 million in revenue, will have a certain gross margin profile, won't require a tremendous amount of capital to scale. So that was kind of what attracted to me them initially.
I love that. I mean, that's something that Giuseppe and I have discussed at length. I think that is going to be necessary to do this. I'm seeing, I looked over your article from the New Year's Eve, and where you're going through all of this big institutional adoption, just to have an aggregate and understand like all these different institutions that are spending so much time in this space. I've got a friend over at NASDAQ. Saw the article that they just published about, their custodial services. They're getting buy-in, stuff like that, which is awesome. So now you've been at Castle Island for a year and a half, you said?
Yeah.
And obviously the 2022 was crazy. We don't need to dwell on that too much. What has you excited about 2023 this year? Do you feel like we're in a good place to push forward? What has you excited? What has you worried?
Yeah, I mean, look, there's a lot to be excited about from where we sit. I think some of the areas where we've been banging a drum for a few years around, you're starting to see startups emerge. So in the proof of reserve space, there's a lot of activity right now. My partner Nick has been kind of at the forefront of that, looking for exchanges specifically to kind of go forward with the proof of reserves, and we're starting to see some things in that ecosystem. I think the other area where we've been, back in, I think 2018 or 19, Matt and Nick wrote a white paper on stablecoins. I think at the time there was only about $8 billion in circulation. There's 150 billion today. I think there's more applications kind of around that will start to emerge. I think from like a venture investor, like hat, like that's like separate from what are the types of things that are interesting. It looked like a really easy place to make money for folks that were entering the industry over the last, call it year and a half, 2 years, where people were saying, hey, yeah, you know what? I will leave my, high paying job at XYZ company, because I can go raise money from whoever at a really high valuation. And then you just get more money. And it's just, it looked really easy. And like to put that, some numbers around that, in 2019 and 2020 combined, there was only 555 seed and Series A deals in this industry. And in Q1 of last year, we were at like a 1,400 annualized deals.
Wow.
So people were just entering in droves, and there was just a tremendous amount to look at. And there was a lot of really talented people in the space. What's really exciting now, because it's slowed down, as you can imagine, because it's you're less likely to leave a secure job in this market and enter raising capital into a market where things have changed dramatically. But the people that are leaving are like, that's what's super exciting, is that you'll have an incredibly talented person that has a very secure job, but they just can't quit this idea. And they have such conviction that they are going to leave their job at Stripe, or they are going to leave their job at Facebook or at Goldman Sachs. And they're coming into the space saying, I have to do this because it's going to exist and I'm going to be the one to go build it. And so there's a quality element where you are meeting with people that have really great experience, that are both, have experience maybe in traditional technology or traditional financial services, but also have crypto experience, which again didn't really exist 5 years ago, where you had like the blend of both. Mm-hmm. And so that's what's like exciting now. It's just you're meeting with these people that they're not looking at the prices, and they're saying, I'm just going to go ahead and build this. I don't care what it takes, and I'm going to figure out a way to raise capital for this. I'm going to hire a team, and those are the types of people you want to be in business with for the next decade.
Yeah, for sure. That's it's become the cliche that bears are for building, right?
Yeah.
But it's reassuring to hear that you're still seeing talented individuals leaving comfortable jobs at large institutions to go and start an idea just because they feel like if they don't, they got FOMO, right? Yeah. they're gonna miss out a little bit. So I guess, when you're thinking about the flows of capital, when you're talking to your portfolio companies and, they may be either panicking on whether or not they're going to get another check. They may be thinking about all of this bad news that's happening around the market and how it might affect their business. How does Castle Island approach that? How are you reassuring them, and how are you preparing them for maybe a more frugal future, at least in the near term?
Yeah, it's a great question. It's something that we've been very actively doing since kicking off, our latest fund is, if you're raising capital in July or August, traditionally you're raising at a seed or Series A, you're thinking about kind of an 18 to 24 months of runway. And, given what the market looks like, we're just saying, hey, expect things to take longer, expect things to be more expensive, and figure out a way to kind of extend that to 30, 36 months. Part of that is just driven by, and we saw this back in 2017 and 18. So in that ICO boom, by the way, like all these generalist firms kind of poured in pretty late and then they disappeared. And they came in pretty aggressively in this most recent kind of bubble. And where they were coming in was kind of in this Series B, C, D stage, where traditionally these firms were coming in. Like historically, if you look at some of these generalist firms, they're Series A investors, and they're coming in a little bit later. And part of that is they're trying to figure out how to get action on the space. And it's easier to come in at a Series B or C because you can look at an income statement and just say, hey, this thing's actually really working, regardless of what industry it's in. Like I can look at an income statement and say this thing is working, and so I'll pay up and put more money in at a Series B or C. And I think a lot of that capital's gone for the time being. And so that's where you're just saying, hey, like let's get to 2025 if we have to. And the good news is look, like if the market bounces back in a big way in the middle of this year, you can react. You can start to spend more aggressively. You can go out and raise additional capital, but you want to be able to be prepared that this could be, a 2.5 year bear market, which we've seen in the past. So it's the good news for companies that have raised in the last year is that if they had plans to triple their employee count, a lot of them didn't get the opportunity to even do that yet. They were starting to hire, and it's like, hey, maybe you only grow your team by 75% instead of 3x in a year.
Interesting. So it's almost like they had the mandate to grow like crazy, but then when things started to slow down, they didn't even get a chance to fulfill it. And so,
and then the ones that had raised capital the year prior are faced with the decision of like, okay, it's time to maybe reduce the team size by X% to kind of give us the runway to kind of survive through this bear market.
Where are you seeing in terms of like management level, where like when you're working with these Web3 crypto companies, where are you seeing an overemphasis and focus, or maybe misguided, right? And where are you seeing a place where they should be focusing more time on, if anywhere?
It kind of depends on where you're selling into today. So there's still like a tremendous amount of appetite amongst these brands. I think I highlighted that in the Medium post that you had mentioned, where you have the Nikes and Pradas and Gucci's and Tiffany's of the world that are leaning into the NFT space aggressively. And so does it make sense to have a bigger focus in sales and marketing if you're selling any product or service into that space? Today it does. If you're an AUM based, or if you are a transaction based revenue business, you're clipping off a lower number today, right? And there's less volume. And so it probably makes sense to focus more on kind of product and technology as opposed to sales and marketing at this point.
Got you. So it's like if it is, it's almost like if it's a consumer brand, right? Then you could almost generalize it in that way and say that you should be spending more on the S&M side. But when it comes to the B2B or the nuts and bolts of these consumer brands, right? The picks and shovels, as you said earlier, they should just be building, right? They should be focused on building a better product, and building, I guess, for hopefully a brighter future, right?
Yeah, ultimately, like if it depends on where you're selling into, but it's if you're selling into customers that are experiencing pain right now, like crypto native customers, how do you make your product as sticky as possible so that they can't live without you? And that would be like investing in product and technology.
Mm-hmm. What role does decentralization play when you're talking to your portfolio companies or potential portfolio companies?
we do some token investing, and so obviously, if we're looking at an opportunity, it's like, what is the path to decentralization? The vast majority of what we do as a firm is investing, equity. We look like a traditional venture capital firm investing in equity and startups catering to the industry, so it's less relevant, right? So if we're investing into a company like Eaglebrook Advisors, which I'm on the board of, they're selling into the wealth management industry. Um, do people at that firm and do we at Castle Island have views on, why decentralization is a good thing for these networks? Absolutely. But our focus when we're investing in a business like that is, how do you sell effectively into the RIA channel? How do you provide a really superior product to these end clients to kind of allocate to the cryptocurrency ecosystem? So it's less of a focus on that lens. I think individually we kind of have a perspective around why decentralization matters, and ultimately those are the tidal waves that we're investing behind. So, we're investing in these picks and shovels businesses, but it's behind three megatrends, right? It's one, you have these new monetary networks that are being built. Two, you have, decentralized finance is a thing. We're democratizing access to financial services and products. Three, people have named it Web3. We were calling decentralized internet architectures. It's really like sovereignty over your data. And we would bucket everything that happens with NFTs there. Mm-hmm. Those three megatrends are all important to have. Decentralization is at its core, right? You're removing gatekeepers and you're allowing individuals to own these things outright. Where we're investing is saying, like, whether it's Bitcoin, whether it's Ethereum as the new monetary network, whether it's something else as a new store of value, kind of, be unemotional about it. What needs to exist? Like, you need to have custodians, you need to have exchanges, you need to have data and analytics, you need to have compliance software. And that's where we're good at investing, is into those things.
So you see, I guess, if I could summarize, the decentralization is driving a lot of the mega trends, but it's not necessarily like a mandate or a goal that you set with your companies. Let's find out a way to decentralize, unless it actually makes sense.
Yeah.
Right.
Yeah. Because we think there'll be like all sorts of businesses that are helping power this stuff. And I think that, like, if we're investing in something that is considering having a token at some point, I think central to the conversation is, what does a token launch look like, and how do you actually become truly decentralized? And that's kind of like a separate conversation around, like, the merits of the people, the market, and the product opportunity.
Yeah. How do you, I guess, when you are investing in some of these more picks and shovels brands, or companies, how do you think about brand? Right. I know that a brand in a consumer company is everything, right? To empathize with your consumers, to get them to get your product. Is that a discussion, or is it more about just the fundamentals of running a good company and building a good product?
I mean, I think brand is always incredibly important. It's around the brand building that you're doing over time and what it takes to get there. But when you're investing at, the pre-seed or seed, it's typically something that's on the come, right? At the Series A, where, you're trying to understand, is there product market fit here? Part of understanding that product market fit, speaking to customers, speaking to prospective customers, you're evaluating not only the merits of the product, the pricing, the competition, but you're also gleaning, what is the brand reputation? What is it like to work with these people? What do they stand for? And so you kind of glean that, through that process. But, I think those are things that typically come almost even a bit later. Because at the pre-seed and seed, it's, hey, there's three of us. We have this really great idea. Here's the market opportunity. Here's the brand we think we could build in the space. But it's, it hasn't happened yet, oftentimes.
Right. So it seems like when they come to you, it's on the roadmap, if you will,
yeah,
to spend some more time and brand and all that. What how do you visualize your portfolio, is there like a matrix or something as to like where you are focused in the crypto industry? How do you break it down? Is there certain areas where, I mean, I don't know if you focus at all on consumer from what we've talked about, but is there certain areas that you stay away from?
I think we probably, like, if you look at our first, second, and now kind of our third fund, like in the first fund, a lot of it was financial market infrastructure.
Mm-hmm.
So companies like Talos and Coinmetrics, companies in the asset management space like Bitwise. In fund two we were kind of leaning more into DeFi and NFT infrastructure. And I think it kind of makes sense because those three buckets that I talked about, new monetary networks being built, decentralized finance, and Web3, they're all at various stages, right? So like the monetary network side, there has been a lot built around custody. There has been a lot built around exchanges. We still see huge opportunity there, right? Like we would say that there will be new exchanges that are going to get built, and they're going to look a lot different than the exchanges that exist today. So there's investable stuff there at the pre-seed, seed, and Series A. But a lot of the things that have been built in this industry have already been built there, right? There are a number of different custodians. There's a bunch of custodians that are being built right now that are really interesting, and we think will gain market share over time. On the DeFi side, it's a little bit more mature, and then I'd say like the earliest stage is this kind of Web3 bucket where it's really gotten hot over the last couple of years, and there's still a lot of infrastructure that needs to get built to make it easier and to obfuscate kind of these public blockchains to end consumers. And so we see like at the pre-seed and seed, a lot of really interesting things in those last two buckets. And the more mature stuff kind of at the Series A or beyond is kind of things that have already been built over the last, 5, 6, 7 years.
Yeah, it seems when you said that exchanges will look different, what exactly did you mean?
My partner Matt's got this thesis, and it's and I think it's right. And we've talked about it a lot internally. In that, given everything that's gone on last year, we think that you could start to see exchanges that actually aren't going to custody assets, that will use a third party custodian to do so. And so, and we think that will actually enable a lot more institutional capital to come into the space. Because if you're a large institution, right, and you look at what happened with FTX, you're saying like, well, this is another reason not to enter the space. But it's like, well, there are custodians. So it's like, well, what if I want to trade? I have to put assets on the exchange to trade. So figuring out that problem, I think is a huge opportunity, both not just for institutions, but for obviously retail as well, which was severely impacted by the FTX fiasco.
Do you or Matt think that will be a startup opportunity?
Yeah,
I assume.
yeah,
Okay,
yeah.
so
There are
it's not gonna be
startups
like
in the space.
Okay,
There are startups already in the space that are kicking the tires on this stuff. So it's there will be companies that are going to go after this.
interesting. So you don't have when I think custody of assets, I think like large institutions with a track record, and but at the end of the day, I guess it comes down to the tech and the people building it. I don't know. I imagine like a NASDAQ or a NYSE or some of these larger companies that are custodying assets on exchanges coming in and just building it. But maybe that's not
I think they will, but it's they typically move a little bit slower than startups, and so that's the opportunity in venture capital.
Yeah.
So I'm sure there's going to be the amazing thing, and that was part of the kind of blog post I put together, is that in one of the most painful years of crypto ever, if not the most painful, you still had all of these really great things that happened. And there's a little bit of irony in that, like, you have this social experiment that was like, what, we're going to take control over our money. We're going to take control over our data. We're going to take control over our financial services. And yet the institutions might clean up here pretty well in the next couple of years. I'm joking a little bit in that I think there's a tremendous amount of runway and opportunity for startups, but these folks are deploying resources, and it doesn't appear like they're slowing down.
No, it does not. I mean, there's almost a new headline every week on both sides, on the consumer side and on the institutional side. So it's really interesting to follow. Where do you see the future of decentralized finance? I know that a lot of the Web3 maxis and crypto maxis have used this kind of fiasco that's happened with FTX and the contagion around it as a way to prove that CeFi is not the way to go. I know that custodying assets is one way to solve that, which we already talked about. But what is the future of decentralized finance? Do you think that there is a way that we can kind of build it out to empower people to own their own assets without centralized institutions?
I do. I think that's where there's like a ton of really exciting opportunity is kind of like, how do right now, I always tell people this that are outside the industry that are saying, I don't really understand how it works. And it's like, hey, just put $100 into a wallet and I'll show you how to do it, and go interact with Aave, and you'll start to see the power of these things. And your mind starts to wander as to where this can go. Like, go on Uniswap and swap an asset, and you can start to see like how powerful this could be. I think like what needs to happen is you need to build tools to make it easy for your grandmother to instead of opening up a CD at her bank to be able to access these things in a decentralized way. And that is, and part of that is what I talked about earlier, which is like, how do you obfuscate some of the blockchain stuff behind it and make it just really easy for people to use. But I think fundamentally, if you look at every financial product and service that exists in the centralized traditional finance space, there are projects that are going after each single one in a decentralized way. And so that's exciting. It'll take time to figure out, which are better than others and why. And I think a lot of the like consumer adoption will increase as these tools exist to make it easy for anybody to enter the space and say like, okay, I understand what this is, and I can, I'm going to go take out a loan, or I'm going to go put this into a savings account.
Yeah, I don't know if I'm oversimplifying it, but it seems like a lot of this is just going to rely on the viability of stablecoins in the long term, because there's got to be a way to get the money on chain regardless of which of the characteristics of finance you are decentralizing with DeFi.
Yeah. And look, like the trains left the station on the stablecoin front, like it's proven as like probably the biggest, the most impactful killer application that exists on public blockchains. But we don't think that like what exists today. We think like Circle is a fantastic company. We think some of the other projects in the space are doing some interesting things. There's a lot of startup activity there as well, though. And hopefully like you start to see a little bit more regulatory clarity in the next year around stablecoins. And I think that will kind of usher in another wave. Look, there's all these like different, use cases here. One is just like being able to settle kind of 24/7. One is like to be able to do these things in a peer-to-peer way, in an auditable way. I think, the thing that gets a lot of folks excited as well is being able to save in US dollars, living in a country that is experiencing, incredibly high inflation. And some of these things are like what people get really excited about working in crypto. And then you have critics that say, hey, that's really not happening. And I'd like to push back just on that. If you look at like the Chainalysis Crypto Adoption Index, the top 10 countries that are kind of in crypto, obviously they have how it's weighted. It's eye-opening. It's pretty surprising. These are places that, are experiencing pretty high inflation. And so if like you're living in a place where, you're inflating at 50, 60% a year, holding something like a US dollar is, for the first time, just with your cell phone and internet connection, that never was, you were never able to do that, right? You couldn't just like go to the US and open up a bank account. And you can now do that with this technology. And I think like that's a really, if you're an American, that's a really great thing. That's a very pro-American story. Like the proliferation of US dollars globally is a good thing for America. And I think politicians are starting to see that, but, on the left and the right, which is great because it should not be a partisan issue. So those are, I don't know, I was rambling a bit there, but those are some of the things that like get us pretty excited.
One of the things I've learned doing this is rambles tend to be the best insights. Actually, I have two follow-up questions. One is when someone is doing a startup stablecoin, like what is their competitive advantage if when they're pitching it, right? Is it based on markets that they're going to serve in terms of like emerging markets, like you were alluding to? How does someone go about that? And then I guess as a follow-up question, what role does CBDCs play in this? And have you looked into that versus these stable coins and how it might affect the crypto market?
I'd say that like generally we're pretty anti CBDCs to hit the second part of the question there first. And I think hopefully we'll avoid a future that that looks like a world full of CBDCs, which is just like a way to track, small transactions for everybody within whichever jurisdiction that you're living in. Without revealing some startups that we're looking at, there are some pretty interesting, stablecoin type startups that are looking at gaps in the market and saying like, we could cater to this type of client with this type of stablecoin, whether it's in a regulated fashion, like a Circle, right? Or obviously people in the space, Tether still exists largely because it's kind of outside the system, and there's some questions around that. But yeah, I'm gonna hesitate to reveal too much until we move forward with the startup.
We found the secret spot.
Yeah, just publish this in a few weeks.
Yeah, it will be actually. For as my Gen Z mentors would say, spill the tea, Sean. That's awesome. That's awesome. So yeah, it sounds like catering to if we could generalize here, right? Catering to new types of clients that may not have access to stablecoins as they exist today is an opportunity, offering reassurances and security around those stablecoins to have maybe certain institutional or higher wealth individuals to feel more comfortable holding a cryptocurrency, if you will. Those general area might be where one would focus. I don't know if there's anything you want to add there, but we can also leave that topic. It's an interesting space for me because I feel like since my beginning in the space, stablecoins have been a very big onboarding metric for how much crypto adoption there is. The Chainalysis report is a great way to look at crypto adoption as well. Actually, next week, we're recording this in January 11th, but next week I'll be releasing my interview with the CMO from Chainalysis, which was one of my more fun episodes, man. I mean, I love what they're doing. I feel like we need that to provide the legitimization of the space. It's kind of like one of those interesting businesses where like the maxis are like, you're the worst thing that could ever happen to this. You're, invading our privacy by doing this. But the mainstream realizes that you need to have protections in place and on-chain analysis like that in order for this to sustain itself in the long term. We aren't just going to have complete anarchy and decentralize everything right away.
Yeah, and there's actually some startups that we've been meeting with that are going after kind of in that stablecoin space. I'd say like they're going after privacy solutions that would be KYC'd, right? So could you have something that sits in your wallet that verifies that, Zach, you have been KYC'd, but your identity remains anonymous on chain?
Yeah, I think that's when we get into like ZKs and all that fun stuff. Because, if you think about it, this is a very rudimentary analogy, but like if you think about when you go to a bar or to buy some alcohol, right? There's no reason that you need to share all of the information on your ID to get that. You just need something to verify that you are 21 or whatever the drinking is, wherever you're buying this, right?
Yeah.
Or
when you're getting a mortgage, you don't need to release like anything you've ever bought, your tax returns for 3 or 4 years. Like it's just such an invasive process. And then you just hope that whatever cloud provider they're working with isn't hacked.
Are you currently looking at or have an opinion on any type of blockchain-based businesses for real estate?
We have a stealth stage company in the space that we've invested in this year. It's one of our larger investments, so can't speak to it yet, but we'll certainly send it your way once we go live. But yeah, that's a super interesting area for us.
Yeah, it is. I wouldn't say I was introduced through NFTs, but early on in 2022, the first Web3 crypto conference I ever went to was one put on by Proppy down in Miami. And it's interesting, man. I mean, they are pretty much having to do double the legwork until people trust the blockchain as like a system of record for these deeds and mortgages and what have you. But they're able, I mean, we know the people that understand how the blockchain works understand that as in terms of that side of it, when it comes to governments keeping a system of record around titles and deeds and what have you, like it's just a lot easier.
Yeah.
I could see that blowing up. We just need more adoption. What about enterprise blockchain? I feel like it had a moment at the beginning, and at the beginning, I mean, right post Ethereum coming out, 2015, 16, 17. But nobody knew what the hell blockchain was then. And now that people know what blockchain is, what distributed ledger technology is, I feel like there's a huge revival in the enterprise blockchain space. What are you guys seeing?
Yeah, we stay away from it. I mean, we're pretty clear on our website about why we think public blockchains are impactful in society. And I think that we use the word public instead of private, which would be these enterprise blockchains pretty intentionally. There were, to your point, there was a number of large financial institutions and enterprise just broadly that looked at these private blockchain solutions back kind of in 2017, 18. And from our understanding, none of them ended up really working. I think which would align with our thesis around why public blockchains matter and why private blockchains are kind of a clunky system where you could kind of build some other technology and some kind of a centralized database that would be probably more effective, cost effective, as well as faster to use.
Yeah, it's interesting. I guess that it brings up a good point where, not everything is going to be solvable by the blockchain. I just think about like the identity layer, and I mean, I guess in a sense, some of that could be public, but obviously you don't want, everything about you on a public blockchain readable. So I don't know. It's that.
Yeah, that's part of the identity space is super interesting, right? I mean, like the way that things exist today with limited privacy, when you're interacting with an application and you connect your wallet, should that be like most of your, crypto asset exposure? You're essentially, revealing all of your financial information to this application, which is like pretty goofy, right? Like that wouldn't exist. Like you wouldn't interact with, Twitter or Facebook and say like, by the way, like here's my bank account, my brokerage, and here's all my financial information just to access the application. And so there's some pretty interesting startups that are kind of trying to figure out ways to tackle that, both just kind of on the privacy side as well as like other digital identity solutions.
Yeah, I just think about the integration that Twitter built with people's wallets. And, just by virtue of that integration, they have all your wallet data, right?
Yeah.
I don't know if they're doing anything with it. Wouldn't be surprised if they were. But yeah, it's just, like to display a picture and prove that you own it. Why do they need to know all the ways that you got the thing, right?
Yeah, exactly.
The one area we have not touched on a lot in your big three mega trends is the consumer area. Is there anything specific that has you excited for 2023 during this, skim in terms of capital injections and building phase? Is it mostly around catering to some of these larger brands entering the space, or is there certain business models that are unique in the space that you have your eye on in 2023?
Definitely. We invested in a company called Try Your Best that I'm on the board of, and they are working with some direct to consumer companies right now, as well as like underway with some pretty large enterprises to launch with. And they're providing kind of the wallet infrastructure for these brands to launch NFTs or tokens, whichever they want to launch. They're calling kind of them collectibles for their power users. So if you're a brand right now and you're trying to figure out who are my power users, you're searching Instagram hashtags for who is talking about your brand, or you're looking on Reddit to say like, which forum here has XYZ brand and what are they saying about my product and service? What 2IB enables is kind of one platform, almost like a new loyalty program for these brands to offer a collectible that gives these consumers access to something. It might be an in real life event. It might be tokens to get a discount at checkout. And these power users can all kind of communicate then with the brand. The brand can say, hey, do you want the red shoelaces or the green shoelaces for the shoe in the summer? And you click green and you get 5 more tokens that you can use, or gives you access to something else. So it's kind of, it's obfuscating a little bit like some of the vernacular around, it looks more like collectibles, but this is like a forum for these power users to communicate with each other and for these brands to bypass, call it Reddit or Facebook or Instagram, and kind of connect more deeply with their power users. And if you think about what's gone on with kind of direct to consumer brands specifically, but I think all brands are facing this, is that customer acquisition costs have just been going up, right? Facebook and Google have all of the market share. They can kind of charge whatever. And so that long, like lifetime value to customer acquisition cost equation that these brands are trying to solve for, the CAC side, if that's going up, it's like, how do you increase lifetime value? Well, you need higher retention. How do you increase retention? You need to engage further with your users. And so this is a new way for brands to kind of connect more deeply. And that's an area where we're seeing like a tremendous amount of inbound from some of the largest brands in the world saying, hey, we get it. We want to figure it out. And, the proof is in kind of, again, the blog that I posted. You have Starbucks and Nike and Gucci and Prada. And I mean,
don't forget
some of the more iconic
and
brands.
Porsche, and
yeah,
they're all coming.
They're all trying to figure it out because they see the power of it. And I think they see the spend that these individuals have online and this brand affinity that they have, whether it's with the Bored Ape or whichever community you may be in, that people have this real connection, both, trying to engage with crypto users, but trying to engage with just their regular power users that maybe aren't in crypto. And so this is a way for a lot of, people would say normies, but people that are not in the crypto space to maybe have their first wallet.
Largely the mission of the show is to kind of debunk and decrypt the difference between what it will take to have mainstream adoption and realizing that not everybody gives a shit about having this level of autonomy, right? Sometimes they just want to engage with their favorite brands in a new way. And that's what a lot of these companies are doing. Yeah. I think it's interesting when you bring up like the CAC to LTV and increasing engagement and reducing or increasing retention. It's like, what does that number become when, and this is not in all cases, but in some cases where the user owns their own data, right? Does it become a clearer, crisper number when user generated content because of user owned content?
Yeah, I think that the CAC side just gets disrupted on who is receiving the money, right? So it's like right now, Facebook and Google largely are capturing that value. And I think the exciting part about things that are being built in, Web3 is that if you as an individual, if Nike wants to show you an ad, will you reveal your age and your, location to Nike? If you reveal it, they'll give you money directly, as opposed to Facebook and Google capturing that. So it's fascinating to think about. I think we're a ways away from that being implemented, but there's plenty of people I think that are trying to tackle that challenge.
There's a lot of good DeSo companies, as they call themselves too. It becomes more like your data becomes more liquid, right? You've got I don't know when it's going to happen, but at some point you have a world, and keeping in mind that this is balanced with the fact that most of this is going to be on public blockchains. Now, your personal information may not be like your actual like PII, but the data that is valuable to companies, which I consider the blockchain the most powerful data, it's intent data, right? It's what you actually do. That will be available, and the fact that you will have the keys to your own castle, and you can take it and say, hey man, I like what your product is doing. I'm in your target audience that you're advertising on some other marketplace that probably gets built around this. What's your monthly rate? What's the rate if I sign up with you for a year? Right? Like what does that mean? Is that possible? It might be too idealistic. I don't know, but I think, the technology would allow that to happen. The question is, will people be in a position that they want to do that?
Yeah.
Yeah. So that's one of my big questions going into this year, is that what happens when UGC becomes UOC, but it might not be a question for this year. It might be a question more for 2025, which, is like 20 years in Web3 time.
Yeah. Oh, it's like, look, it's all these things are at different stages, and like it feels like they're going to happen. It's just, are you too early if you invested in something like that right now? Are you too late? Getting the timing right's pretty difficult.
Yeah, it is. Well, we're nearing the top of the hour. I want to be mindful of that. I'd have two traditional closing questions where I close all my interviews. The first one is, how do you describe Web3?
The way that I think about it is just leveraging public blockchains to enable individuals to have sovereignty over their money, over their data, and their ability to access financial services. So it's really owning the ability to access this versus like a middleman gatekeeping that. That's kind of how I think about it. I like the read, write, own kind of definition that people have, but the way that I like view what's happening across, call it crypto or crypto Web3 or whatever it is like people are leveraging public blockchains to kind of take back control over their money, their data, and their financial services. I think that'll evolve though. Like I think like 2 years from now, you'll have kind of new things that get built, and I think that definition will kind of expand a bit.
Yeah, it's interesting. As I've got it in my title, I kind of have to really focus on that. I obviously ask it during every interview, and like the more I think about it, the more I think about it abstractly as you can, which is it is the third iteration of the web. It happened to be closely linked to blockchain technology and the proliferation of that technology. But if we're talking about the third iteration of the web, I don't think it's exclusive to blockchain, right? I think that ownership is furthered by other technology like AI as well. So I'd be interested to see how it expands. I know now it's like a bad word. I know Ryan Salkus in his Masari reports like back to crypto in 2023. Let's get rid of it. But yeah, no, I appreciate the definition. The read, write, own, whenever I get it, I always ask like, can you go a little bit deeper for me? Anyways, the last question is forward looking. Where do you see yourself and the industry writ large in 6 to 12 months? And then where do you see yourself in the industry in 5 to 10 years? And feel free to be as audacious as you want. That is meant to be a fun question.
Yeah, I mean, in the next 6 to 12 months, I think like big focus for me is, being heads down, helping portfolio companies hire, helping them find customers, making sure they can withstand, a pullback in the capital markets within the space. I think looking at new opportunities, you're looking for those rare founders that, make the hair stand up on your arm when they're telling you a story, and about what they're going to build, and seeing if there's a way to partner should everything else make sense. Should the way we evaluate everything is people, market, product, and then the deal. And so you kind of have to check a box on all of those. As I mentioned to you, like some of the areas that we're pretty excited about is kind of around proof of reserves, some of these real world assets use cases, whether it's stable coins or real estate that we had kind of chatted on briefly. And then in the next 5 to 10 years, I mean, look, like I think I joined Matt, Nick, and Ria because our view is that there will be generational venture capital firms built off of this technology, just like there was off the internet. And I didn't want to kind of, this to me is the last stop on my career. Like I want to be at Castle Island for the next 40 years, building that. And that was something that was very much aligned with Matt, Nick, and Ria when I joined. And so we're kind of, everything we do is intentional around like, what do we look like, not 10 years from now, but 20 years from now. And it may sound a little crazy, but that's our view is we think there are some awesome venture capital firms that were built in the mid 90s, in the early 2000s, a decade ago. And our view is like, how do we do that? How are we around 30, 40 years from now? And what do we look like then? And what can we do now to kind of put ourselves in the best chance to get there?
You heard it here, folks. They're going to unseat Sequoia in 20 years.
Your words, not mine.
Any big audacious predictions for the industry?
I think we're going to see some people go to jail. I think
Please.
I think that's going to happen. And I think that we'll actually finally see we'll get some regulatory clarity on the spot market, on stable coins. I think if you kind of use Enron as a proxy to FTX, you had a lot of bipartisan regulation that came out shortly thereafter. And so my prediction is that this is enough of a catalyst for both the right and the left to come together and say, let's figure out, who has control over the spot market. What do we, how do we want to regulate stable coins? And so it should be an interesting year down in DC on that front.
Yeah, very interesting. And they have to come together, right, with the House and the Senate split. So we'll see what happens. Thanks so much for coming on, Sean. I really enjoyed this.
Thanks for having me, Zach.
Thanks for tuning in to Web3 with me. If you enjoyed the show and want to help us grow, please hit the subscribe button on YouTube or leave us a review on Apple Podcasts or Spotify. If you want to connect with me personally, you can find me on Twitter @Zach_French_.